This is the final panel for the day. It's future tech. So future tech has already been brushed on numerous opportunities today. We've talked about the change of mindset. We talked about paradigm shift. That was from our good friend Troy Zimmerhansel. We've talked about workflows being more electronic. We've talked about getting modern. I think that was from Mike at Equiland. The whole panel on DLT was true reality rather than science fiction. And as I just mentioned, T0 is something, again, not a reality yet, but we're definitely going that direction. So in the preparation of this call, and I'll introduce my co-panelists shortly, we want to make sure first that we narrow the topic so that whilst we're relevant in terms of existing solutions, and obviously we're looking at future tech, so we're looking at the short future, that we don't stray too far into the land of science fiction. That's point number one. Second, we want to put things into a wider context. There is an outside world. We tend to forget it when we work in this business, that beyond securities financing, equity funding, repo, and all the other interesting, beautiful things, there is a world. So put things into the wider context, and I'm sure my brilliant panelists co-panelists will help on that. And finally, we sort of said, let's be a little bit controversial and bring up the question that is often thrown at us in our organization is securities financing behind the curve? So is that true? To what extent? Why? And then maybe even more importantly, are we catching up? So along those three lines of narrowing the topic, put the tech into a wider context and addressing the SEC financing behind the curve element, I would like now to introduce my panelists, and I'll start with you, David. Let me see. David, how about you take the floor and introduce yourself?
Good. Thanks, Gabby. I am David Schoen. I am Director for Market Infrastructure and Technology at ISLA, having been there for 2 years. Primarily have been looking after the extension of the CDM to the securities lending space, and more recently kicking off some digital asset working groups. So I can talk more about that in a bit.
Fantastic. Ken?
Thank you, Gabrielle. I'm Ken DeGilio, CIO of Equiland. I've been at Equiland for almost 6 years now. I think everyone knows Equiland. We had some people like Mike and Ian on the panels earlier, but for those of you who don't, we're a global trading venue in securities finance and play in the post-trade data space and now the books and records space. We're also a registered broker-dealer, ATS and MTF, soon to be an OTF. And thanks, Securities Finance Times, for having me today, and I'm looking forward to a good conversation, hopefully some interesting questions, and maybe even some fun debate.
Vessel.
Thank you, Gabi. So my name is Wassel Damak. I'm heading the collateral solution strategies at Vermeg. One of the solutions is called Colleen, ex-Lombard risk product. Of course, as a software vendor, we are focused on technology, and on my side, especially the technology underlying the collateral processes and data.
Thank you. Martin?
I'm the head of product management at Broadridge Financial, covering securities finance and collateral management. We have systems covering repo, securities lending, trading, as well as collateral management. So I've been here about 5 years now. Before that, I spent more years than I can actually count to working in banks, in securities finance and prime brokerage IT.
So and I'll start with you, Martin, then. Thank you, gentlemen. Let's kick off. So Martin, again, let's talk about today. Narrow the topic. Broadridge is probably even larger than JP Morgan now. So for you, going to the other side of the barrier is interesting. How do you work with your colleagues now? How are things with the other areas of Broadridge when you say I'm in securities financing?
Oh, it's. I mean, as you probably know, Broadridge's core strengths have come from areas which are actually very closely related to securities finance. So we're extremely big in the post-trade area. We're also one of the world leaders in investor communications and proxy voting, which with the ESG angle is actually causing more of an overlap with securities finance. And Broadridge has recently moved more into the front office and electronic trading world with its purchase of Activity. So I think there's a lot of things making we're a very collegiate company, but I think there's a lot of things making us work a lot more closely together across the different divisions of Broadridge.
And does that happen?
Yes.
So, do you have a few examples? I'm bringing you to the final part of the sub question, which is, are we behind the curve? It's not very subtle, but it's help me.
Okay, so yes, so I'll just give. So one of the areas we have been cooperating with our investor communications area is looking at the whole process around recalls. So there's various things which trigger recalls. So one of which is related to voting. We also have a corporate actions system that we provide. So we have been looking at how to make the process around recalls more automated, but more fundamentally more data driven. And we're also one of our core strengths is we actually have access to a lot of that data. So I think it touches on some of the trends people have been talking about in previous panels, but which we'll touch on, I think, more in this panel is about automation using data, and not just automating just workflows, but automating decision making.
Yeah, in fact, the data-driven data is a word that we've heard a few times, maybe not as often as if we were on a FX panel or a fixed income. I think the whole panel would have been on data. So I'd be interested to pick that one up. Do you think we're behind the curve on in SEC financing, the curve, technology curve?
In spite of spending an awful lot of my life in securities finance and related areas, I have actually worked on other asset classes as well. So I have spent several years working on FX front to back, touched on equities through the prime brokerage area, and I would have found it enormously fun to join a panel where we talk about AI-powered drones taking data along blockchains and delivering it to quantum computers. But I think having seen other areas of capital markets, both from how business is transacted and how the technology works, there is a very clear path of travel, which I think securities finance is traveling along. But areas like FX, cash equities have been moving along in that direction for a good number of years, which is ties in very familiar themes. Electronic trading. In FX, most trading is electronic. Standardization of booking models and data. Greater standardization around the legal side, and also as things get more automated, just using data a lot more intensively, both to supplement and to a certain extent replace people in a lot of the decision making. So that's not just equities, that's a lot of derivatives, that's FX. And I think we are traveling along that path, but we have been slower at moving along it than a lot of other asset classes. But I think it's kind of inevitable we follow that path of direction.
Thank you, Martin. Ken, back to the three themes or pre-themes, and again, nothing too strict here. Narrowing the topic. So, Equilend. Equilend's always at the forefront of innovation.
I agree with you.
What have you been working on?
So look, you teed up a whole bunch of things in the opening comments, and I think, we want to spend most of our time talking about sort of what's the new future world order. But you asked a very not so subtle question is, are we behind? I don't want to waste anybody's time on answering that question. I think that the answer is yes. I mean, I've been sitting here listening to all the pre-panels this morning. I heard live questions around how do we get off of spreadsheets and how do we get off of fax and how do we get off a phone. I heard the word dark ages a few times, and I heard a lot of comparisons to the cash equities businesses, which sort of, I grew up on the cash equity side, the wealth management side, and the retail brokerage side. And I've been, in securities finance deeply and for the last 6 years. And I think the answer is simple. We're behind. I think the industry has done a lot, and people like Equilend have helped a lot to make continuous improvement and incremental change. But after listening to the panels this morning, I think it's clear that we need to really drive transformation, and we really need to drive innovation. And it's not just a technology thing. We need to sort of adopt new workflows and paradigms. So, in my job at Equilend, I would say everybody's job at Equilend, we live and breathe this every day. We like to say we were born digital. And none of us have a crystal ball about sort of what, the new future of tech and sec finance is. But I think we could all agree with confidence on one thing that's certain, and that it is not going to stay the way it is today, because it just can't. So I think we all now have a bunch of imperatives. Martin was talking a lot about data. I mean, it's growing at an unwieldy pace. The regulatory pressures from some of the early panels, I mean, they're not dissipating. If anything, they're just going to, get harder on steroids. We're all forced every day by our own firms, by our clients, to bend the risk curve down, to bend the cost curve down. The settlement cycles are going to be compressed to zero. We heard that in the last panel. And then the big theme of the day, and it was the opening panel, was all around transparency. And transparency is not going to be an option anymore. It's going to be a mandate. So the desire for real-time data and real-time quality data that we can trust is just going to be an imperative. So that's the given. On the crystal ball side, and I'm not going to get science fiction-y on you because you asked us not to, but if I had a crystal ball, I mean, the questions I would ask it is this Web 3.0 thing real? How real is it, and how quickly does the world adopt to it? Are crypto assets here to stay, or are they some variation of Ponzi-nomics? I mean, I don't know the answer to that. Certainly, the last couple of weeks might lean you in the latter. Does DeFi take hold? And if it does, is there still room for, trusted intermediaries like Equilin, like the other folks on this panel, like a lot of people in the audience? Is there still room for us in that picture, and how do we play in it? So that's the stuff I would ask the crystal ball. I have my personal views, and I think Equilin has a stance on answers to all those questions, but I don't think it's worth getting into them because at the end of the day, we're probably going to be wrong no matter what we try to predict. So what we try to do at Equilin is just build core capabilities and root capabilities that will allow us to pivot and have extensibility and a free option to go wherever the world, wherever that crystal ball brings us all. So we've made big investments in things like cloud and artificial intelligence, machine learning, big data capabilities, analytics capabilities. Those things are in the past. And what I would say now is we're looking really, really hard at DLT and blockchain. And we've been spending a lot of calories on that internally recently. We've had a working group with a bunch of clients going on for a few months now. And, we're starting to call that initiative internally, at least. We're starting to refer to that as One Source. And One Source is really about, doing for all securities finance lifecycle events what NGT did for contract origination years ago. If we can bring all those items more towards the front office, I heard that theme this morning, more towards the point of sale, to hopefully, eliminate breaks or drive breaks down to near zero. I think that's the paradigm shift, and that's the transformation, and trying to create a closed ecosystem where things aren't done out of band, or I'll put in air quotes, off chain. So we believe things like new technologies like DLT can help, and we're looking hard at them. And we do think that if we lever them correctly, it will not only allow us to innovate at scale and speed, but also to future-proof ourselves and the industry participants.
What a difference a year or a couple of years makes. Thanks to that. It's by the way, don't worry about being a bit science fiction. If we had Roy, moderating a panel earlier, so we can definitely relate to Roy. I hope you're hearing. Relate to what was recent or even still actual in terms of structure to the needs of the industry going forward. And as you said before, there's controlled evolution, and there's also the part that's not controlled. The word transparency came up, and that's been a word that was only mentioned after 6 o'clock in pubs, and usually followed by a lot of laughter. At least in my days, it says a lot about me. Don't take any notes there, David. Marcel, you're supposed to be very innovative, so pick up the baton from there.
Yeah, sure. Thanks, Gabi. I think that if you think about collateral management as an operational process, it has improved over the last 10, 12 years, mainly driven by regulations, and we have been very involved in that. So we have seen more automation of the various parts of the collateral lifecycle, underlying and supporting the trading. We have seen a good collaboration across the industry to improve the efficiency, and it has been proven during the times of high volatilities that we have seen in the last 2 years. So if you want, I will, nuance a little bit the topic here, just to say that for collateral management underlying the trading, including security finance trading, if we are thinking about question of how are we sourcing the collateral, how are we locating it, how do we run eligibility checks, how do we run haircuts, concentration limits, how do we send out the settlements for the collateral, how do we make sure that it really settles, how do we value the collateral moving forward. For all those questions, technology helped a lot. And even though there are some discrepancies between the different asset classes, between OTC derivatives and the others, even though certain processes are not yet there in terms of automation, like collateral optimization, but I think that overall technologies like software as a service, like cloud open architecture with native APIs, has been key to transform the collateral infrastructure and to streamline the connectivity within the collateral ecosystem, generally speaking. So the question now is, what are the next challenges? How can those emerging technologies help? There are questions like how do I look to how do I have instant recording of the collateral movements? How do I see immediate settlements, even outside working hours? How do I see real-time use of liquidity? Things like those, DLT could help to find the solution. But the solution is not only relying on DLT, because the solution is basically a combination of what has been done, like APIs, etc., but also DLT, etc. If you think about, for example, if you are trading crypto assets, you need to think about the safe custody of those assets, the settlements of those assets, and then you have to use the blockchain for that. Other examples where DLT can help. If you are, let's say, a big bank with multiple obligations on the collateral side against CCPs, against counterparties, you need to keep high liquid assets for your covered bonds. You have needs from your sec lending desk, for your repo trading desk, etc. So across all those different collateral obligations that you have, that each of your desk is having, how do they manage their inventory? How are they efficiently moving the inventory from where it is to where it needs to be? How do they track all that across all the relationships that they have? So things like this, maybe, again, DLT can bring a solution for transparency and for having this real-time view of all my where my assets are, where is my inventory, how do I move it quickly, and how do I substitute, what to substitute, how to run optimization algorithm, etc. So I think from my side, a lot of things can be done. A lot of investments went into the collateral space underlying the different asset classes, collateralization, but there are certain questions that could go further with certain examples that we are seeing to be in place now, either using DLT or artificial intelligence or any other emerging technology.
Well, that's thank you very much for that, Vasil. And again, Ken, I didn't thank you or Martin for your contribution on that. So if I in my very, very basic and primat style took this topic to you, David, and said, typically the securities financing industry was why change a winning horse or winning team, to I'm in favor of change, but I'm not changing, to we need to change. And probably then we can subdivide a few years back, but how do we do it? And now we're in a situation where, guess what? We can pick and take stuff from everything else. Would that be a fair reflection of what you see as an Isla Bonita representative?
Yeah, basically, right. So it's quite a nice summary, actually. So I will confess to having led the witness slightly in Roy's panel and suggesting that paradigm shift cusp, right? I think that's exactly where we are. The irony is, if you look at the makeup of the panels today, and I don't want to offend anybody on this call, and I don't think I will, that it remains a very traditional business with players that have been around for a long time. But there is now that realization that actually there is a need for new blood. There is a need to consider how new technologies can help us, right? So it's all, the quote I hear a lot is, well, securities finance is a relationship business, right? The underlying the inference being that, well, we don't need technology, we need people, we need to talk to each other, we need to do things the old way. My view is actually, by becoming more efficient and more and automated and doing business smarter and quicker and more cost effectively, you're actually going to improve your relationships, right? So I think we are getting there.
Is that happening, David? Is that happening? Yeah, so, I'm asking the question.
Yeah, so I think
if I go into a bank or a buy side, and I see people older than me, and I tell you, there aren't many of those left. I don't see young dudes. I don't see people not wearing ties. This is. So I'm asking the question.
I think it is starting to happen, right? It's not an overnight thing. Certainly this year, I've seen a lot more openness to even things like the CDM, which have a basis in the traditional world, right? So if I sort of kind of wander through a few of the themes that actually I'm very pleased have all been touched on today during the panels, right? One is the clamor for reform, without trying to sound too French revolutionary, right? People still want that standardization, want that automation. So they are actually starting to come to think, and I apologize for mentioning CDM too many times, which I'm sure I will. They are starting to come to those working groups. We are starting to see subgroups of people within our membership form use case collaboration groups to look at specific things. So for instance, we have a trading working group looking at how do we standardize and automate the process flow for evergreens and extendables, right? Something that, those products have been around for a while. We didn't have a standard legal agreement until just before Christmas. Once you put those standards in, you can start to automate, right? And people are starting to make that realization. Tightly coupled with that is, I see increased collaboration around the table. So not just in things like that, but if we look at DLT, for instance, right? I have seen groups of peers within the industry sit down, and we've heard from some of them today, start talking about, right, what do we do with DLT? What do we do with digital assets? What do we do with tokenization? How is this going to actually help us? So we're seeing things like there's a lot of discussion around unlocking pools of liquidity. We heard from Paul Piri today, for instance, right? But also on the edges, we're seeing some of the challenger banks come into the space, unlocking their retail clients' holdings using the new technology. But that's traditional assets still, right? So you've got that kind of bridge between the two worlds. And you are getting, the challenger banks are new blood in the industry, right? You've got a different kind of mentality there. Shane brought it up in one of the earlier panels. But I think the message needs to be that without sounding too trite, we need each other, right? So you mentioned, Ken, there about last week and the crypto asset space. Is it more Ponzi? Is it not, right? I think there needs to be a realization from the traditional finance world that what is happening in the true crypto asset, decentralized space, the public chains, etc., is effectively research and development on the public, right? We need to also realize there will be an institutional version of that, and we're starting to see some of that, whether it is tokenization or there are increased numbers of people talking about native bonds. In order to get that right, the people at the forefront who just want to innovate and do things and play in the unregulated environment will need to realize that actually traditional finance has made all of these mistakes over hundreds of years, potentially, right? We've made all those mistakes. We've had the regulation. There is something for the traditional world to offer. And in return, the traditional world needs to realize that actually they shouldn't dismiss these new technologies as being unsafe play toys, right? But that they can actually enable them to do better, smarter, and bigger business.
Okay. Well, I must say that I've been on a couple of panels with these or similar themes over the past, and usually the most innovative participant would be torn to bits because of all the reasons that most of you have mentioned in terms of. But actually, the lack of will was probably the biggest thing, and that paradigm shift, is probably never been used at a better moment than the way you put it today. Good. Let's make this a little bit more interactive. If it's okay with you. Thank you for your introductions. We had a number of questions that we wanted to bring up, and the first one we had was, now what is the measure of success? If we're saying that now we don't really have any reasons not to move forward, or we are open-minded, we have the right staff, we have the right quality of technological providers. What is the measure of success of technology development in our space? And this is a question that, Martin, you were going to pick up. But again, anybody, please feel free to step in and make this as interesting as possible. Martin.
Well, I'm a vendor, so my measure of success is how much. Sorry, I'm a vendor, so my measure of success is how much I can sell. But ultimately, that comes from the success of our clients. And this is a capital markets business, so fundamentally, people are interested in P&L generation, efficiency, and risk management. So if you end up with systems that allow you to generate more P&L with less, in a more controlled way, I think that these are the fundamental measures of success, but they're the fundamental success we've always really had in capital markets.
Vassal, you are also fronting customers with a hard sell, and all of you have a hard sell. What I'm bringing you will make your life better. Is that a fair assessment? Are you finding that you're? In fact, I'll tell you what. Are you having more and more of your customers introducing you to other customers, or using your existing customers to say, hey, this saved us this or saved us the other? A general question, but I'll pick on you, Vassal.
Yeah, I think David touched on a very important point, which is the standardizations across the industry. So I think that we can think about new technologies, we can think about new things that we are bringing on that side, but if we don't work on talking the same language, on identifying a eligibility schedule the same way, so that it can be used by all the different entities around the trading activities. If we cannot have the same CDM representation of what is a CSA, what is a GMSLA, etc., then I think the path will be very long to have the benefit from those new technologies. I will take a small example that we are working on currently in the existing technology. So you know that by November 2023, there will be one layer called European Collateral Management System that is across all the 19 European countries. And we are providing the technology behind that. And for this project, the most important thing, the most important word behind it is harmonization and standardization. So having a harmonized view of the way we define things and having harmonized view of the processes, of the data, of the technology behind that is key in this process. So I think that with what we have seen when discussing with our clients, they are more keen on working on this standardization because it will bring more efficiency and it will bring the capabilities later to scale the technology and be on a higher level in terms of embracing those new technologies in a faster manner. So this is one thing that we have seen it. And the other thing is that, as I said, leveraging the existing technology in terms of, connectivity, APIs, etc., but also in terms of collateral optimization. So we are working with many of our clients on how do I optimize my collateral assets across securities, finance, cleared business, not cleared business, etc., etc. So there's a big push behind the collateral optimization, and many of the discussions are happening right now about that. And I think there are technologies on the market, especially around the vendors or built-in technologies that could help already on that space. So these are the things that we are seeing now with our clients.
Ken, the more the electronic, the more the environment is electronic, the more participants, the more business. So would you argue that the measure of success from your angle would also be seeing more participants or more volumes or more what?
I think we're going to see more volumes. I'm not sure about more participants because some consolidation going on, but I don't think we have any control so much over the volumes as we unlock more collateral to the world. I think my definition of success would be, a simple litmus test would be, hopefully when we're on this panel 2 years out and we ask that opening question of, are we behind? Everybody has a unanimous no, rather a unanimous yes. And it feels to me like it's not the success of Equiland or Broadridge or any of the particular people on the panel. It feels to me like the entire security finance industry is either going to be successful or not. So I think there's going to be a lot more interoperability and a lot more collaboration and a lot more co-opetition. And I think that's where we're all headed. So, I hate to sound too cliche and say we're all in this together, but I think we're all in this together.
Well, I'll pick that one up and go back to you, David, because that is the cliche end of quote that you use. We are all in this together. So what is the measure of success here?
Well, it's funny because I was going to say I would have said something similar to Ken, and I'm aware that we've appeared a few times on panels together. So just to be clear, we do appear separately if requested. Look, the measure of success for obviously from an industry body point of view is that there remains an industry to represent, right, and a healthy, competitive one. Similar to what Ken said, I would actually define success as with the negative, right? So if in 3 years' time we're still talking about trading being done on spreadsheets or collateral management still being done on spreadsheets and telephone calls as the norm, then we have not solved our automation problems. We've not moved into the future. And you run the risk of being usurped by other current non-industry participants.
Right. So actually, we've covered a lot of the ground that we covered originally, but I want to go back to the measure of success. So again, because there is one driver, and it came up on a number of panels, which is that there is no luxury now of not being successful. There is no excuse. Maybe that's the right word. So I want to delve in a little bit more, and that being the regulation, that being transparency. These are once these words are out there, then it just ends up on your desk. If you're ahead of the curve as a participant, you find out about it early. But if you're not, and the majority of our participants are probably not, then you have to adapt. Then you have drivers which are not maybe which require investment and adapting. We talked about data. Data isn't there's no word that comes up very often on these panels. So let me go a little bit further in there and ask the second question we had, and I'll come back to you on this one, Ken, which is how long is this going to take? We're saying in 2 years' time this, and if it doesn't, if we find out that everybody's still using spreadsheets, what does that even mean? So how long is this going to take? We've made strides over the last couple of years. What's going to be that landmark moment where we say, right, this industry now is expanding, or better, or safer, or more profitable?
Look, I think any technologist worth his salt would only answer that question one way, which is it depends. And I think it depends on a whole bunch of things that are really about technology. And then I think probably the harder part is all the things that aren't really about technology. Now, the end of the DLT panel came very close to answering this question. So I thought they were going to give me an exit ramp. I had my pen out. I wanted to sort of repeat their answer, but they didn't quite give a specific answer to your question. How long does it take? On the technology side, look, there's no silver bullet, and transformation is not easy. And transformation is obviously a journey. But I guess I would give the simple answer of I can tell you now that it's going to be a lot quicker than I would have answered even just a couple of years ago. And I think that's all around the evolution of some of the technologies that have been out there, and some of the leverage companies like Equiland have done to embrace those technologies. And I mentioned them all before, so I won't go through it again. And I think the whole street, including our industry, has adopted Agile and things like DevOps. So I think we have real accelerators out there. Some of the work that David and Isla is doing around the CDM and standards, I think, positions us well to do it faster than we would a few years ago, right? So on the technology side, I'm bullish that it's going to be quite quick. That said, there's a lot of buzzwords out there. You got to separate the sizzle from the steak. There's a lot of market textures, I call them, being sold out there to the street. So you got to sort of pick your battles carefully. when you flip to the non-tech side, and we heard it on this panel, we heard it earlier today, there's people issues, there's budget constraints, there's resource issues. I think Martin said it earlier, we've got to sort of re-engineer before we automate. So when you start to overlay the sort of legacy processes, and in you said it before, you don't see a lot of people not wearing ties, and you don't see a lot of young kids running around. I beg to differ with you a little bit. I think the nature of the workforce is changing a lot. I worry a little bit that the future CIOs are going to have more psychology degrees than computer science degrees, but I'll deal with that on my own. You can't underestimate this sort of war on talent that's out there, and the need to reskill people, the need for people to embrace change and new paradigms. So it's the non-tech adoption piece that worries me. So now I'm starting to sound bearish, but I'm still bullish. I think the difference now is what a couple of us have said already. Is the difference now is we have the enabling technologies. And add to that, we have no choice. I mean, we have an imperative now. So I think there's a lot of motivation out there, and I think there's a willingness for people to collaborate a lot more than there was even a few years ago. So I know I didn't answer the question a little bit intentionally, but if I had a gun to my head, I guess what I would say is I don't think the answer is 5 to 10 years anymore. I think the answer is less than 5. And if we do it correctly and everybody gets on board, I think it could easily be 2 to 3. In the process, I think you'll see incremental improvement and some real step functions. I think we'll be surprised to the upside. I think we'll see those step functions sooner than we all would have thought.
Well, it's almost like technology is saying, we're ready. What about you lot? And that hasn't been the case in the past. Martin, do you agree on that?
Generally, I would agree. Looking at what we need to do and what we're capable of doing, even with existing technologies, this is something that's achievable, I think, within 5 years or less. When I say achievable, to actually catch up with some of the other asset classes. But I really think how long it really takes, I think as people touched on, it's not just about technology, it's the combination of the desire for people to change and the desire to actually do those business cases to make those investments, combined with the external pressures which come from regulation and just changes in the market. So I think the technology firms or the highly technology focused platform providers like Equilend, I think we are ready, but I think we need to continue working like partnerships to actually make the business case to make the investments necessary, as well as actually participating in industry initiatives like David's CDM.
Which, of course, might become even more important. As you said before, make those investments. The people you speak to have to make an investment. The people you speak to, Ken, have to have the possibility of making those investments. The people you have to speak to, Vassal, have to make an investment. So you make that investment because you can actually make a business case where you're going to save money, you can save time, save effort, and that's the point you brought up at the beginning, Martin. Or you make that investment because the regulator comes in and says, hey, guess what? If I take a page from the book of equities, I take a page from the book of consolidated tape, I take a page from the book of this, I take actually T-1. How about that? Even more complicated in the past. Or I believe this. Then the make the investment becomes very, very, very forceful. Is that just to close on this chapter of how long will it take and what's the measure of success? What would you add on this, Vincent, on this point?
I think, yes, you are very true when you say we have to build the business case and we have to see the immediate benefit of that. And as Ken was saying, transformation is a journey. And that journey needs to show benefits at every step. So if I take a concrete example for the email, usage of email today in the margining for the sec lending and the repo space is still there at the big portions in many cases. And those emails, they are, of course, causing cost and operational risk, etc., etc. So having things like that would solve this concrete problem without changing the overall landscape or the full IT stack of the company is something that we have been asked to work on, for example. And this is concrete, where you have a small, let's say, digital component that will read email, that will automate the margining behind those emails, that will read, it will understand the ask behind the emails to pay or to receive margin, etc., and that would integrate with the existing legacy systems on the collateral side, whatever are those systems. This is a concrete example of a digital component that can solve an efficiency and operational risk problem, and it's part of the journey of transformation. So for me, I think that that journey needs to show benefits as long as we progress, and we need to build those business cases with the clients by listening to the specific problems that the clients have. And that problem can be solved through a technology, and then that's where we have to execute the usage of that technology and make it happen. And this is how we are helping our clients in these days.
Thank you very much for that. I have a couple of questions, but I'm actually going to finish the sequence that we're having, which is we had it in, maybe we'll answer this a little bit differently, but it was, what if we don't succeed, and or what if we try hard and we don't succeed? So what if we don't succeed? And again, this is very high level, but what's the impact? David, you mentioned earlier that if we don't succeed, other providers come in. This is a bit mind-boggling for me.
Yeah, I mean, so that's.
We remain in an Excel sheet to Excel sheet environment, or we don't buy any of Vassal's or Martin's products, or we decide that trading on a platform doesn't make sense. We call Gab. Yeah, you get me done, mate. We come up with the proverbial the best friend of second. What happens? So
obviously there's an element of that, right? There's an element of any sort of evolution in business that you need to continually adapt, or you die, right? Like the Kodaks, the Blockbusters of the world. So there isn't that element, but actually, I'd rather focus a little bit on, you mentioned regulation there, right? So if you consider why after 2008, we got the raft of regulation, all of the reporting that we've had to do was mentioned in the first panel today. We've been dictated to by regulators for what they want, and people have built solutions. And the thing is that they focused on the solutions without actually considering how do we use this regulation to the benefit of the business, right? But why did that happen in the first place? The regulators came to the industry and wanted information, and we couldn't deliver it to them in a standardized, consistent fashion, or give them the information that they wanted. If we don't get this next set of technology right, if we don't get tokenization and native digital assets right, if we don't get the new, if we don't get any of that correct, and we still have data issues, and we still have lack of automation and manual amends, and the regulators come to us again and find us in the same position, then we failed, right? Ideally, we as an industry should be approaching the regulators with, right, we've got our ducks in order. Here's our standard model. It allows us to interoperate. It has all of the details you might want as core data elements in order to do any of your supervisory duties. Join us on this journey. Tell us what you want based on these data elements, and you know what, guys? You guys write the rules in a machine readable format and take what you need. But we're ready to give you that information. You don't need to impose upon us rules that we have to interpret, and inevitably everyone interprets slightly differently, right? So we'll be back in a position. We need to regain control of the industry in that sense, and actually. And actually not be in a position where we just get a next layer of regulation, which adds to the cost of trading, adds to the cost of operations, requires firms to buy yet another solution or build a new solution that's just laid on top of the mess that we already have that is causing all of that operational inefficiency.
But it sounds to me that first, there's a much more cohesive approach, or much more industry approach, much more mastered approach from every elements of the industry. And I've also heard that so far or recently we've had a lot of a better collaboration with regulators. So these things, if the dialogue is from peer to peer, always work better. Is that a view generally shared by you, Martin, by you, Vassal, by you, Ken? You are ready. We are ready for the next step. We are ready technologically to talk serious, not science fiction, as I like to say. We will take those challenges. We will catch up.
Oh, absolutely.
I believe so.
Fantastic.
I think so as well.
So let me step in now before we finish. We have another 10, 15 minutes. We have 3 questions. One is, what time are you coming home? I think that's from my wife, so I'm not going to answer that one. I'll leave that one with you, David. Second one is, a few years ago, blockchain was a solution looking at a problem. It's been mentioned a lot today. So was that past conclusion wrong or just too early to accept? Or indeed, and I'll start answering a little bit earlier, actually closer to fruition than we thought? And I think, Ken, you are pretty well placed for this one.
So I guess just one piece of clarification. I don't think we've heard blockchain mentioned a lot. We've heard a lot of talk about DLT. I distinguish the two and throw away some of the blocks and throw away things like proof of work, and you get performance. And I think you get something that's better placed for a use case in our industry. So I used to run around.
Yeah, when I heard the word blockchain, I was like, oh, that's so 1990s. But anyhow,
look, my boss will tell you that I used to run around saying it's a solution looking for a problem a lot. Except I would say the difference is I used to end that sentence with, but if it finds a problem, it's very likely to find it in our securities finance ecosystem because it's just ripe. It needs it. And I think the contract structure and the life cycle events plays nicely into the concept of a shared ledger. So I also think it's come a long way. I think the technology has come a long way. I think some of the solution providers out there have come a long way. And I think certainly I have, and I think the industry has gotten a little more practical in sort of what we can lever it for. So I still believe, even right now, that there's not really a use case or a problem I see in front of us with securities finance that we at Equiline couldn't solve without the implementation of DLT. The one use case or problem statement that you can give me that I would say I would probably have to use some implementation of DLT is if the requirement was I need federated trust. But lacking that, which is really the DeFi play, I think we can solve any of these problems without DLT, but we have a very strong hypothesis that we shouldn't. And that if we lever DLT and the capabilities of the attributes of it, the tokenization capabilities, the shared logic, replace that with smart contracts, the golden source of a contract state at any point in the day at any time. So if you take all the attributes of DLT, we have a hypothesis that says, why not lever it? And I think it does help us future-proof for some of the things that might come out of that crystal ball someday.
Martin, would you agree on that statement?
Just to roll back slightly, I think I think if you look at conferences and how much time is spent talking about DLT or blockchain, there is I think there's a high degree of DLT fatigue. But I think a lot of that comes from it wasn't so much that DLT was a solution looking for a problem. It was that many people were proposing DLT as the solution to everything, but without quite articulating how it solved anything. So I think Broadridge, for instance, has a distributed ledger repo solution that deals with a specific use case. It's live with a number of banks, but its DLT was used as a solution to a specific problem. So when we look at specific technical problems that we have to deal with, that's an option. It's not like this is a piece of magic that will solve everything. So I think there has been a general shift towards people being more pragmatic and trying to actually is looking at this as one part of the technological toolkit for solving problems.
Which answers very nicely the question, because in a sense, both of you sort of cover the fact that in the cards that you have to offer today, DLT and no longer blockchain as some of the old folk used to use. I have a second question, which is right up your alley, Vassal. Are CSDR penalties going to drive the adoption of technology we're hearing about today at the symposium? I'm pretty sure you can answer that one.
Yeah, I think the CSDR penalties has already, I mean, like any other regulations, has already impacted the current technology that we are seeing in the market. Meaning that, for example, on our side for Colleen, we had been asked by clients to, of course, besides actual real-time settlement, which is not a luxury in the collateral movements. So even generating the final SWIFTs to settle that on cash or securities, etc. So that's a given, that's a must-have. But also we have been asked to manage properly, partial settlements, so that it is in real time reflected within the collateral movements, etc. So this is already something that has impacted the current technology, and we can respond to it with the current technology. But now, if we want to push it further, and we would like to talk about, we hear the T+1, T+0. We heard the real-time settlement, instant settlement, like we are beginning to see on the cash side for different ledgers. I think there is a big potential where DLT and other technologies can help. And I think that the technology will help to comply with those kinds of regulations in a quicker manner, and will simplify a lot the settlement processes. I think that there is a room there to investigate how those technologies can help comply with those kinds of regulations, and it is something that will happen in the next couple of years. I think this is something that will be pushed very strongly by not only the regulators but all the industry around the settlements.
David, do you agree on that?
I think it's a shame that the penalties are needed in the first place. I think, as somebody said to me yesterday, look, perfect settlement, while it might be an impossible target to reach perfection, it's a bit like the speed of light, right? You can get very, very close to it if you want to. So I do think that I think adoption of the technologies we've heard today will negate some of the issues that we've got, but I'm not convinced that we will get to 100% settlement even with those technologies in place.
But again, if we start from zero, anything above zero is better. We have 5 minutes left. We had another issue, but I think you've covered it, Vassal, which is about another point. Sorry, which is about convergence of derivatives, sec lending, and repo. I think you covered that in the first part. I want to give each of you a couple of minutes, and I want to come back on some of the magic words that you brought up, Ken, and make sure that we close this whole event with a really serious look into the future. So you brought up Web 3.0, you brought up crypto assets to stay, you brought DeFi. I'm a kid from the 60s, so I don't know how to pronounce that one. We got the proverbial mega data AI. In a year's time, what's the name of this panel? Is it about Future Tech? Is it Future Tech underlying Web 3.0? Is it crypto assets to stay? Is it more about data, which wasn't mentioned that much in my view compared to other panels? And I don't know who wants to start on that one. And these are our closing remarks. So. Remember, these might be kept on TikTok, and in a year's time, your boss might come along and say, "What the duck were you going on about with that?" Vassal, you can start. You're smiling.
Thanks, Gabi. I think that yes, a lot of those buzzwords.
Which one?
For me, DLT and artificial intelligence are buzzwords that we would, of course, consider as a reality already in certain use cases, and as the most close ones to help in the securities finance trading and collateral management, but also collateral management on a wider scope. I think that we are here as a software vendor to make sure that our clients can we define together, we listen to our clients to understand what are the problems, and here we are here to embrace the new technology so that we make it available for our clients to solve their problems, and this is the role of a software vendor, and I think that we are helping a lot of clients in that field. I think that we will see in the next year the emergence of those technologies for sure.
Super. Martin, so we have AIDLT. What do you have?
Well, I think if we're talking about what would next year's panel would be like, I think we've all fairly clearly articulated the direction of travel of where we need to go. So I think it'd be really great if next year's panel we are actually we're talking about some of the facts and data about how far we've actually got, both in terms of how has electronic trading progressed, how do settlement file levels look as a measure, and also tangibly what have we been doing to actually advance some of these things. I mean, I touched on some of the things we've been doing, prototypes and proof of concepts, but what have people been doing and actually getting into the live world in terms of things like data-driven decision making, and killing off spreadsheets. I think these are some of the things where I think our friends at ISLA would be fantastic help at gathering the data to actually give us a benchmark of where we are now and where we are in a year's time, because we do really need to actually measure. We know where we need to go, but I think we also need to measure how fast we're moving along that path.
A man with his feet on the ground. Ken. Travel in space, my friend. Go ahead.
A year or two out, I would hope. Maybe the name of the panel is OneSource, but if not that, it would be something in the headline of scale and efficiency, probably driven by data and this concept of single source of truth. And I agree with what Vasil said. I think there was a question earlier whether the tech firms and the vendors are playing their part and doing what they can. And I think all the people on the panel, including Ekelund, are here to help. And I think the industry needs to rely on us to drive some of the innovation, because we're the only ones, I think, well positioned, the vendors and the networks we have, to bring economies of scale so that everybody's not doing their own thing.
I thought you meant you as you Ken, or you as Ekelund. I was almost.
I prefer be Ekelund. I think all of us play a role.
So, David, you have a role in terms of ISLA, and obviously your role at ISLA. No pressure here, my friend. But you have a role not only in terms of making sure that the foundations now are well filled in, that effectively there is not only the right direction when you interact with the participants and maybe the regulators, but more importantly also to measure, because everybody is expecting from you guys to say, right, we are more efficient. There are less of these things running around the floors. There's more. There's less fails. Is that a fair assessment, or is that too much for your very broad shoulders? Come on, be a big.
No, that's fine by me. I agree with all of that. Look, I hope that in a year's time we are talking about some of the successes of the industry working groups that are out there, right? So I hope we are talking about actual implementations of the CDM having been advanced by the open source repository that we put in place, that we're actually started to, or that we are midway talking through standardized legal documentation to support the digital asset space, and also talking about how there was room for the traditional and the new together, right? And that there's a bigger pie around. If we're doing that, then hopefully we've done our job. And Martin, I note the request measure. As a start, I will take a screenshot of this panel and see if we're all as happy this time next year. Yeah.
Make sure.
Or whether your shoulders are broader.
Now.
Everybody's looking good. Okay, I think we've come to the end of our panel. So I would like to thank you all for all your participation in preparing it. I've certainly learned a lot. I'm extremely optimistic about the way this industry is moving forward. Not that anybody gives another duck about that. So David, thank you very much. Ken, thank you very much. Vasil, thank you very much. Martin, thank you very much. Best of luck going forward. I think finally you're in a space where You're not trying to explain the Big Bang and all the bad things that happen, but you've got positive messages going forward. And look forward to talking about all those themes in a year's time. Thank you very much, gentlemen.
Thank you.
So now I put my other hat on.